Hi guys, it's Jago FS here again. So in today's video, I'll be showing you two important patterns that works almost all the time in the forex market. Now, what I mean by that is that these patterns, out of maybe 10 times, they work 8 or 7. So it is a win out of 10 times. And you also want to know that you don't use them independently. There's something we call confluence. You want to add other patterns to corroborate the your possibility of the pattern working for you on the chart whenever you see it. So this is what I've seen on the chart times without number, and it has worked most of the time. But before we dive into the chart, this is my YouTube channel, Bullish Villa Academy, and we currently have 340 subscribers. But I want you to do me a favor. If you have not subscribed to my YouTube channel, then you are on the wrong side. So before we dive into the video, I want you to please subscribe and also turn on the notification buttons so that you can receive new videos whenever I drop them. So these are videos that I've done, and they are going to nourish you, and also they are going to increase your knowledge of the forex market and help you make better decisions on the chart so that you can make a lot of money. Alright, so without much ado, let's dive into the chart. So I'll be showing you these two important patterns. There are two of them, although we have a lot of them, but I'll be taking this class in batches. So probably I'm going to call this batch A. Now we have the first pattern to look like this. We have a sweep, then we have impulse correction, then we have a break, then price came down to take this low, so we have this, and then so the first thing we're having here, we're having a sweep, so we have price coming back to this zone, price comes back to take out this loop, and we have this. Okay, so we have this. So this is the first pattern. This is the first pattern. So the first thing we have here, we're having a sweep of the previous low. We're having a sweep of this previous low here. Then after the sweep, we had price coming to this level. We had a push, a pullback. You can see price gave us an high. Then we had a retracement. Then we went further to take out this high here, this last high. Can you see? So this is a break. So we have BMS. So this is a break. This is a sweep. This is a sweep of the last low. This is a sweep. Please just pay attention. This is a sweep of this last low here. Now, this is a break of this last high. And you see price came down. Price came down and took out this liquidity or inducement, whichever one you want to call it. Price came back. Price came back. You can see he used this liquidity here. He came to clear this inducement here, and after clearing it, you can see it went up. You understand? So we had a sweep. Then before this break here, price will do something like this, high and a low. Price is going to create a low here. You understand? It's going to create a low. Now this low is going to serve as a liquidity, because price will still come back to use this liquidity to fuel the impulse move that later happened there. So you can see we had a sweep, then price gave us a liquidity here, an inducement here, you can see, then went up to take out this high. Then we had a break. After the break, price came back to use this liquidity here to gain more momentum, and so that it can go to the upside. And that was exactly what we had here. So this is the first pattern. This is the first pattern. Then the second one is this. This is the second one. The second one, we're having a sweep of the last low. And we're having a break of this high. Then a pullback, another break. Then we expect price to come back to take this liquidity. Check out this liquidity before we have price moving to the upside. So we have something like this. Alright, so you can see so let's tag liquidity LQ liquidity. Let's see. So we have the liquidity. This is the liquidity. This is another liquidity. You can see. So the same way we have it here. So we have a sweep and a break. Very easy. Can you see? This is a sweep. This is a sweep of the last low. And we're having a break. Break of the last high. As a break, a sweep and a break. Can you see? Then a pullback. Can you see this pullback? Then we had another break. So we're having another break. So price is coming back to make use of the inducement so that you can gain momentum for the push up. Can you see? That was exactly what we have here. Now, these are two patterns that you don't want to joke with. This pattern and this one. So I want you to go over it again and again. But let's just take one example for each of them. Let's take one example. Now, this is Euro JPY, and I'm just going to be showing you some of the trades I took recently. Okay, this is Euro JPY. This is on a 1 hour time frame. So this was the trade I took like some days ago. This was a trade I took some days ago. So for Euro JPY, if you look at this trend now, if you want to look at it from the 4 hour time frame, we have been having a bullish trend anyway. We're having a bullish trend. But if we now come closer to where we want to look at, now price has been ranging along this side. Now this is on a 4 hour time frame. So what I did was I had to concentrate on this range below, since I'm a day trader, you understand. So what I was looking for here, I saw that we're having a downtrend, a bearish trend. You can see low, high, impulse correction, impulse correction, impulse correction, impulse correction. But if you look closely, you will discover that we had impulse correction, impulse correction, impulse correction, then impulse correction, then we had this last impulse. But you see that this correction has taken out this last high. So immediately I discovered that this last high has been taken out. Then I paid more attention to it. You understand? So what I did was I came down to my 15 minutes time frame so that I can see the chart so clearly. I came down to 15 minute time frame. So whenever I want to see the chart clearly, I come down to 15 minutes before taking my entry. So you can see. So this was what we had on the 15 minutes time frame. So there's a break already of this last high here. So let me remove this. Can you see? So you can see that number one, if you look at the chart closely, we had a sweep. This was the last low before this sweep here. Don't forget, this was the last low. This low here before this sweep. So we're having a sweep. This is the first. This is a sweep here. We're having a sweep. So we're having a sweep. A sweep of this last low here. This was the last low. So we're having a sweep. Then after the sweep, we had price give us this impulse correction. So price gave us this impulse, then it's coming back. So what I did was that after I saw a break of this high, so I knew that okay, price wants to start going up. Understand? After I saw this break, and I also saw this sweep of this last low, then I paid more attention. I was looking at okay, what is going to happen next. Now immediately I saw this impulse and price starts coming back as a correctional movement. Then I entered a buy. Now from this trade, I even entered two positions. I entered two positions. I labeled this one A and the other one B. Let me show you. I entered two positions on that trade. So I'll show you the before of the trade. I entered two positions on the trade. Okay. Is it this one? Okay, yes. So this was the trade. You see now, yes. So this was the trade. This was the before. So I entered two positions, A and B. So I was expecting that if price gets to this level here, so you can see we had a sweep, then we had a break on the 15 minutes time frame. A sweep and a break. Then we had this fair value gap here. So I'm expecting that price will come down, mitigate this fair value gap and move up. But if this one doesn't yield, if it breaks below, then it can come to this other block here and tap into this other block and then move up. So I had these two zones already, and there is nothing bad when you have two zones ahead. No, it's not this one. Wait, come. I'm not sure it's this. Okay, this is the trade here. This was it. So yeah, this is the trade here. So immediately we had a market structural shift here. Immediately we had this. I was waiting for price to come back. I waited for price to come back, and when price came back and it started going up there, I was able to take my buy from here. Yes. So this was the before. This was the before of the trade, and this was the after of the trade. So that was the before and the after. So immediately there was a sweep here. So immediately we had this sweep. I waited for price to come back. Immediately we had that sweep. So immediately we had this break, this market structural shift at first. Immediately we had this market structural shift. I waited for price to come back to retrace. So I was even expecting it to get to either 51 or 50, from 50% and above before, but it came down again to still clear this low. Imagine. So it didn't even take. It came down to discount. It really came down to the discount and even cleared this last low. So we had the break, the market structural shift. Then we have the break, the market structural shift. Then we had the sweep. Then you see price after the sweep. Then we had the impulse correction. Immediately we had the correction. I entered the buy immediately. And the reason why I took this trade was because of this break. Since this last high has been taken out, I knew that okay, the price wants to start going up, and that was why I took, and I got some. So you can see I showed you the before. So this was the before, and we had the after. We have the before and we also have the after. So that was why I took this trade, and boom, it went away. Then this second one too, this second one, I also took this trade. Can you see? So it's similar to the previous one we just did. It's similar. So if you look at this this range here, we're having low and high, lows, high. Can you see? We're having the lows and the high, low and the high, low and the high, and low and the high. Don't forget, in a downtrend, the last high must not be taken out. Once it's taken out, that means it's already giving us a signal that there's a change. So we have the low. Can you see? We have the low. Now we have the high here. Now this high now has taken out this last high. Can you see? They have taken out this last high. Then we now had a sweep. The sweep of this last high. Now after this sweep, then we had a break. Can you see? Market structural shifts. We had a break here. So you can see that this thing is very easy. And this is, don't forget, we are using those two patterns. Those two patterns I actually used before I enter this trade. So if you look at this clearly now, you will see that, let me remove this. So if you look at this clearly, you will see that this is on a 15 minutes time frame. Please, I want you to pay attention. You see that what we have here, let me show you what we have here. We have this. We have this. Then we have a sweep. After the sweep, then we had this. Then we had pullback. Then we had a break. Can you see? Then price came back to take out this low. Then boom, to the upside. So if you look at this pattern now, you see that it is the same pattern I gave you at first. Can you see? This pattern is the same pattern I gave you. So if I remove this pattern now, look at, I've brought it out. This was also the same pattern I gave you previously. And this so this is, let's go to 1 hour. Okay, so if you look at this now, if you look at this pattern here and this pattern here, you see that they are the same thing. That was the same pattern I also gave you with this one. It's just because I killed this one. Okay, so can you see? So if I decide to expand it now, you see, so this is what we are having. If I decide to expand it, so if you look closely now, this pattern here and this one, they are the same thing. You understand? Then you can see price coming down. Price came to this level. You can see price used this liquidity to fuel and go to the zone before going. Understand? And this was the same pattern I also used here. You understand? But it's not that clear on the 1 hour, so that was why we went down to 15 minutes. If you go to 15 minutes, it's more clearer. So let me show you. Just pay attention. Can you see? Can see very clear. Very clear on the 15 minutes. Can you see? Very clear on the 15 minutes. You understand? So I want you to go and practice this over and over again. Can you see? We had this. We had a sweep of this last low. We had a break. So we have this sweep. Then we had a break. Okay, before the break, we had this high and low. Can you see? Then we had a break. Then price came back to use this as liquidity. Can you see? Before going up. Can you see how simple these things are? Yeah, can you see? So if I bring it out, you see that it's the same thing. You understand? You see that it's the same pattern I also gave you from the beginning. Understand? So it is as simple as that. Understand? Then I also want you to which other one? I think so. I'm going to show you the before and the after of that video of that trade. Okay, this is it here. Can you see? So this was my analysis here. So we had a sweep, a break, then we had a fair value gap here. I was expecting price to come mitigate. So I had two zones. So there's nothing wrong when you have two zones. The price gets to this first zone and it broke out of it. Then I was waiting for this other block. The price will probably come to this other block. And from there it's going to go up. The price got to this fair value gap and mitigated it a bit. Like 30 or 40%, then it went up. Understand? So this was the before, then this was the after. Can you see? This was the before and this was the after. Although I didn't take this trade that day, I didn't take the trade, but it played out using that same pattern. You understand? It played out using that same pattern. Okay, this other one I took a loss on this trade. So I just want to show you the power of these two patterns. You understand? And I don't want you to joke with it, and that is the focus of the video. That's the focus of this video. You understand? So the other patterns I would love to also show you, but I want this video to be very short. But for this one, I want you to go and back test it. I tell you, this pattern works all the time. I want you to take your time, back test it on different pays. Go and back test it on different pays. Then you begin to apply it. You understand? Go and back test it. And like I said, whenever you see the patterns, you don't just jump into it. You want to add other strategy to it. Maybe candlestick, fair value gap, and some other ones too. You understand? So that at least it can corroborate and give you more possibility of going your way. Understand? So don't joke with these two patterns. Well, so this is where we are going to be ending the class for today. So in our next class, I'm also going to be showing you more patterns. I'm going to be showing you more patterns and also more trades. So currently I'm actually on a trade I took yesterday. Okay, so the trade is still playing out. You see, so this is Evo USD. This was a trade I took since yesterday. You understand? So after we had a break here, I waited for price to come to this, to grab liquidity here before I took a buy in. So this trade is still in, it's still running currently. This was my before. Okay, yeah. So this was where I took the trade. This was where I entered the trade here. Maybe in my next class, once this trade plays out, in the next video, I'm going to be explaining to you why I decided to buy at this level. So, alright, so this is where we are going to end today's class. And then I'm going to be seeing you in the next one. But before then, please don't forget to subscribe to my YouTube channel if you have not subscribed. Subscribe and also turn on the notification button. There are a lot of educational content that are there that are going to change your trading life. You understand? They are simple things, but I want you to take those things into consideration, and you don't just watch a video once and you feel you are done. No, you watch it over and over again. You watch, you practice, you watch it, you practice, then you start trading too. Because it's not just about watching videos. If you are watching videos and you are not trading, it's just like somebody watching swimming videos and you are not going to the pool to swim. So no matter how many years you watch the videos, it is until when you now go to the pool to start swimming. That's the way it is with trading too. A lot of people today, they will tell you they are profitable and they've been watching videos for years, and yet they are not doing anything. They are not trading. So it's not just about watching videos. As you are watching, the trading, the back testing. So that is how you get better. Alright, so thank you so much for your time. I'm going to be seeing you in the next one. Bye.